Hi, this is Vijay Bhambwani. I'm back again to talk with you about a very critical aspect of the market. What if you could guess in advance what the market is going to do in the future? I'm not talking of astrology here, but if you want to compare the market and the study that I'm talking about right now, let's talk about how astrology helps. If you were to go to an astrologer who would tell you what has happened in the past in your life, you're not really all that interested. What you want to know is what's going to happen in the future. So today, I'm going to tell you in a non-astrological fashion what you can expect from the US market and how it impacts the Indian market and more precisely your portfolio. I've written an article on equitymaster.com about how a particular phenomena called the US presidential cycle takes place every 4 years. Unlike India, where the political term of the office bearers is in multiples of 5 years, the US president enjoys office for 4 years. And every 4 years, there are elections held in America, which happen to be on 3rd of November 2020. You heard me right, 3rd November 2020. That's less than 11 months away. The US administration takes some steps which are extremely predictable and you could say they are universal in nature. Every politician wants a feel-good factor ahead of the elections so that he can get re-elected. So expectedly, inflation is brought down, employment prospects go up, corporate profitability goes up because WPI, which is raw material costs of the corporates, go down. Inflation is brought down, so there is higher household saving. Crude oil prices go down so that inflation can come down. And the biggest aspect here is that the US dollar will be strengthened. Why does the US dollar need to be strengthened? Because America is the largest debtor nation in the world. America owes a lot more money to its creditors than it has to recover from its debtors. If the US dollar is strong, they have to pay less money out, which is why every 3 years, the US dollar suddenly starts to strengthen, which is approximately 12 months before the presidential election. The financial world calls this phenomena the presidential election cycle. If you Google search this, you'll get a lot more info in depth on this phenomena. Now that we know that the American market is going to experience a significant amount of feel-good factor, irrespective of the fact that corporate earnings are not really all that great, the US headline indices like the Dow Jones or the S&P 500 are making new highs. Now you know why. I've shared my secret with you. What can you expect as an Indian investor? If there is a feel-good factor in America, you will realize as a Nifty or a Bank Nifty trader that our indices tend to follow the American dream. If the American market is bullish, chances are, I'm not saying this is laser precise, but I'm saying chances are the Nifty and the Bank Nifty should be positive, barring unforeseen circumstances. So if the US market is headed higher, I would say the Indian market will also probably follow suit. If inflation has to be brought down in America and crude oil is to remain soft, that's good for India. Our household savings will go up, prices at the fuel pump will come down, and because fuel is what economists call a multiplier commodity. Because if fuel prices were to go up, your taxi fares, your bus fares, your auto rickshaw fares go up, and very next day, your green vegetables, your fruits, your eggs, your milk and meats, grains, pulses, everything becomes more expensive. So it has a multiplier effect on inflation. And in the next 11 months or so, if oil prices are likely to be subdued by a strong dollar, I think it's good news for India because prices at the pump will either stagnate or come down. So that is good for lowering inflation. Unfortunately, the dollar will strengthen. If the dollar is to strengthen, probably, now I'm using the word probably here, the rupee will weaken against the dollar. So some amount of the positive effect of lower crude oil prices might be negated. But net, I would expect and I would remain optimistic that the rub-off of a rising S&P 500, the New York Stock Exchange headline index, the Dow Jones Industrial Average will have a positive impact on the Nifty 50, the BSE Sensex and the Bank Nifty. The other thing that you can expect is that Donald Trump, in all probability, will try to calm the minds of his voters by having some kind of a breakthrough in the trade talks with China. You don't really want to head into elections with headwinds on the trade war front. So I think in the next quarter or two, you will see some cooling off, some rapprochement or handshaking coming halfway across the table and de-escalation of tensions. Financial markets get extremely nervous when there are trade wars. Any kind of de-escalation in trade wars will be cheered by financial markets by bidding prices higher. So all companies that are exporting goods and services from India are likely to see better days, and their stock prices will reflect the better prospects, which is again good for an average Indian investor. The other thing that will happen in the US is that the CPI will be rejigged. The erstwhile President George W. Bush, in the election run-up from 2007 onwards, actually ensured that the CPI or the Consumer Price Index was deliberately brought down by including house rents into the CPI. We all know there was a glut in housing, and housing is what actually caused the collapse in the global financial crisis in 2008. So since there were so many houses available for rent, house rent started falling. So house rents was brought into the Consumer Price Index computation to make inflation look lower. This kind of gravy dressing can be very well expected from President Donald Trump also. Items that are going down in price will be brought into the American CPI so as to window dress the outlook on the economy. Either ways, it's good for India. If stock prices are rising higher, we wouldn't really care less. So the coming 11 months, I can look forward to with optimism in my heart, because the US presidential cycle and the US being the richest country in the world, a lot of money is at stake. Let the American president worry about window dressing the economy and giving a feel-good factor. I believe we should ride his coattails and let the gravy train move on. So hey, let's make some money. Profitable times ahead. Till we meet again, this is Vijay Bhambwani signing off. Have a profitable day. And if you're watching this video on YouTube, please don't forget to click like, subscribe to my channel, and do tell me in the comment section how you liked my video and what else you'd like me to talk about. Do not forget to share this video with your family and friends. Thank you. Bye-bye.